I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in May, and I am joined by Christie of Banyan. Thanks for being here, even though you don't have a lot of voice because you've been talking a lot this week.
It's been a busy week, so a little bit of a voice. I'll do my best.
So it's been a busy week because you put out a new resource estimate. And just to set the stage here, I mean, it was only in 2019 when you discovered the powerline deposit, first holes into powerline, and beside it, you already had airstrip, which was a small known zone of mineralization that didn't have a resource on it. That was 2019. It is now halfway through 2023, and you now have 6.2 million ounces across those two zones, which is a phenomenal accomplishment.
Yeah, feels pretty good. People always thought, oh, it's going to be too small. And, even when I came up with 4 million, everyone's like, well, it needs to be at least 5 million. Okay, fine. Now we're at 6.2 and lots of room to grow. It's open. Like we're drilling up on Aurex Hill right now. You'll notice that, Aurex Hill, and then we have a couple small pits that are distal to it to the east. We're going to connect those because we know that's a higher grade zone of mineralization through there. So, this deposit really is a monster. It's over 5 kilometers of mineralization defined now by about 1.5 kilometers.
Amazing. So it's 6.2 million ounces, which is a big number. With the average grade of 0.61, is that what it is?
0.61, yeah.
0.61 grams per ton gold equivalent. Gold.
Just gold.
But you and I were just chatting. There's actually, if you raise the cutoff grade, you get up to 4 million ounces. That's almost a gram.
Yeah, if you used a 0.5 cutoff in all the tables and added them up. And then you have to realize that those aren't all together.
Sure.
And what would the strip ratio about? But using that as a really interesting guide to see where's the high grade through. Can we see some trends through here? Absolutely. There's definitely 2 distinct trends, one in the north, one in the south. So now that we've got this resource, yes, we're going to continue to grow it and show that it has more blue sky potential, but we're also turning our mind to that development sense and looking at things like that and going, okay, how do you make this a mine? How do you optimize the economics? Where can you find your starter pit areas? Where do you find the 2 million ounces that you need to mine in the first 10 years to make it a 200,000 ounce producer? And that may not be the right number. That's another part of it is, do you make it smaller? Do you make it larger? And all of that is stuff that we're starting to think about and talk about. So it's actually really fun.
And while growing a resource, you will continue to grow the resource. Like you say, you're drilling up on Aurex Hill right now. You got to connect some pits that are there. It looks like that's working. So it looks like this significant pace of resource growth has good odds of continuing as you continue to drill through this year. But then the other really interesting thing is this mine planning work, which sounds boring. I know, mine planning work. But actually, once you get to a resource that's this chunky, 6 million ounces moving on to 7 or whatever it becomes, you have to start showing that it can be a mine, because what's the end game here is to either build a mine or have another company come and buy it so that they can build a mine. So let's talk about just some of the work that you are doing there in a little bit more detail, because it could really matter.
Well, first part is the metallurgy, which is super important, and the various flow charts, and understanding both the heap leach scenario and the mill CIL scenario.
Yes.
And there's different scales to both of those. And so understanding that those kinetics are important, and the process flow chart, and then looking at where infrastructure could go, and looking at where your high grade is, and kind of figuring out, you don't want your infrastructure to be too far away, but you also don't want to put it on top of mineralization that you're going to mine later, unless it's really high grade that you can mine. So I'm actually finding it really interesting, some of the people that we've been talking to about that, looking at strip ratios, understanding mineability.
Absolutely.
It's going to be an exciting year from that perspective.
For sure. And I mean, when you talk about, like I say, end games for junior mining companies, you either keep growing and transitioning yourself and your personnel to build a mine at some point, or you take your project to the point where a company that is good at building mines comes in and buys it to do that. And you have to demonstrate. And some of the things you just said there show to me the kind of optionality that this thing has. It could be a heap leach, or it could be a mill scenario. It could be, there's a range of scales that it could be at. Like there's a bunch of different options, and companies like options because they might want to build it their way.
Absolutely. And they all look at it there. And some companies want you to be into the permitting process.
Right.
Some companies don't want you to do any economic studies because they don't want you to preconceive the idea because they're going to mine it their own way.
Yeah.
So that's part of preserving the optionality of the company. we know that there will be a mill in this district. You know, when you look at Victoria Gold's high grade right across the valley, that Eagle or the Raven, 1.7 grams per ton. And I think that resource is going to grow a lot.
Okay.
Are they going to put in a mill, or are they going to put that on the heap leach pad? I don't know. That it depends how big it gets, and the economics will drive that.
Mhm.
But if we had a mill, you know, there will be a district mill somewhere in the. I believe it's Canada's next mining district. So it's good to explore all the options and look at that, and so that anybody who looks at it can see what they would build.
Yeah.
And we might take it all the way down the road to feasibility study and permitting. You know, Victoria Gold might become interested in us. Hecla might become interested in us. Somebody might become and be interested in the whole district.
Absolutely. And you put this news out as it turned, you can never time these things, right? You put it out in a week when the markets were just not interested in junior mining stocks of any variety. But I would posit that suggests there's an opportunity here. I think if you'd put this news out even a month ago, then I think there might have been a pretty positive reaction to it. Unfortunately, you didn't get that, but I think it speaks to the opportunity in the stock.
Yeah, you know, and I'm not as worried about the retail as so much as my existing shareholders. And, you know, we've delivered what we committed on to our shareholders and what we financed on.
Yeah.
And we've got money in the bank, so we've got lots of time. And I think the last 2 times we've put out resources, it's never been an instant, oh my gosh, recognition. It's taken a month or more time. And if we put it out a month ago, maybe we would have had a little bit of love, but we might have sold right back down in this market. We could have waited 2 months, but then we'd be beyond, you know, it'd be the middle of summer. Everybody's gone doing other things, and people will be wondering, you said you were going to have this by mid-year. So get the news out. Here it is. Yeah.
And carry on. Well, I know you still have a lot of work to do. There's drills turning. There's all these mine planning studies to do. And I wish you luck on all of it. And I look forward to keeping up with the news.
Great. Thanks, Gwen. Appreciate it.